Good morning, traders. Welcome to the TMT Pro Trader Premier video for Friday, June 2nd. All right, guys, this is the confirmation that we needed. We needed this move to say that we are aggressively on a fifth and final wave of this whole bull market run since 2009. We are right now aggressively into this blow-off top. We haven't had it as of yet, but this candle just solidifies the move that we are officially in our last leg and the most aggressive leg of this bull market run, where everybody now is buying stocks. Everyone. There is not a person that I don't know or I hear talk about buying stocks. That the markets are not going down. If you look from 2 weeks from Wednesday, last Wednesday, we had a huge, just a grind, slow grind with no volume. We had yesterday, we talked about how there's huge red flags, and then I mentioned we've had that before many times, and sure enough, that's exactly why I haven't put out a lot of indicators, because they just don't work on the fifth leg of a sentiment rally. It's all based on feel good, let's buy the market, just close your eyes and buy the market. So I'm not going to waste time in these videos, in these research videos, but every once in a while I want to show you what we're seeing. And all of a sudden we had the transports and a Russell, two major leaders not leading, and what happened yesterday? They all ran up, and that is what I was looking for, to give you a final, okay guys, we're on a fifth leg, and now this is it. This is going to be the blow off that we're going to run basically vertical straight up into this area that we've been talking about for the last couple of weeks. Once this happens and it concludes, and then we get the sell signal, it's going to be a nasty sell-off. And I'm telling you guys, something in the last decade that we have not seen, and it's going to provide a tremendous amount of opportunity if you guys are on the right side. And being a TMT subscriber, believe me, we will put you on the right side of the trade. But remember, it's all about the technicals, and the technicals read, we have to understand that sometimes it takes a little time before we get the confirmation. Now, today needs to hold, okay? If we take this whole candle back and go back to the downside, which I don't think that's going to happen. We're already up 6 handles in the pre-market, made another new all-time high of 24.37 and a quarter in the ES as I'm recording this. So that tells me that we've made new highs already. We're already outside of the previous day. So the shorts are going to get hammered because the shorts tried it here, and now they're going to literally start to capitulate and cover. That's going to add fuel to the upside. The IWM will continue to move higher, it looks like, as well as the transports. The FANG stocks, if you will, is exactly what I was telling you. They pound the VIX. To give you an example of VXX at all-time lows ever been seen. VIX at all-time lows. And the most short interest, heavily shorted ever since the index has been created. So that tells me that those shorts will get hammered at one point in time when the market reverts back. And the algos and HFTs are on buy mode. That's all they do is probe and buy. Once that stops and they turn around, it's going to get ugly, because there's no one holding up the market here, because retail are buying spiders, they're buying ETFs, they're doing it themselves. They feel, why pay a manager when I can do it myself? It's so easy. And right now they're being rewarded, but it's going to change. Believe me, I've been doing this for a long time. I've seen it. It's going to change. Now, when does the market top? Of course no one knows. I don't know. We could stop here at 24.50, 24.60. We can go past 25.50. We just don't know. It's when we get the sell signal confirmation, like we just got the confirmation, we are on our fifth leg up. We could go up for 2 more days and fail, and that's it. And then we go back down again. So we will continue to monitor. But in the meantime, what have we been saying? Buy the dip. You just got to follow the herd right now, because you cannot short this market. There are no sellers out there, because the big guy, the money, the big smart money guy, wants you to believe you have to buy the market because they need to get out. Okay, we've been talking about this for a very long time. All right, so let's get right to it. Here's your daily chart. Again, there are absolutely no resistance. Please do not short the market. Please do not short the market. I've had a couple of emails. Oh, what do you think about a short now? Absolutely not. Shorting at highs is a process. There has to be a pullback. Then there has to be another bounce, and that bounce has to fail, making a lower high or double top, and then break down again. At least you know where your stops are going to be, easy to manage. Here is like shooting yourself in the foot. Please don't short the market. Look to buy pullbacks, especially now we're coming into summer months. Friday is generally bullish unless there's some news that comes out. Do not short the market, guys. Okay, next we're going to have our 10-minute. You can see here clearly held our spots, right? We let me get rid of this here. This was I don't know why that's there, but this is a spot that we've had for a while. We held. We filled the gap. We took the gap area out, right? And what did I say yesterday? I'm sorry, a couple of days ago. Well, this is what I was looking for. We're probably going to go up yet again. And sure enough, you could go look at my videos, guys. This analysis is professional analysis that you're getting for pennies on the dollar. This here, this big move up, this is your area resistance right now, which we've already broken through. Do not short the market. Look for pullbacks. Look for these areas here. You got a small 24.25, and then you're back down here to 24.18. Okay, 24.18, 24.25, and 24. Right, 24.25 and 24.18 are your two areas of support to look to buy pullbacks. Okay. Next is going to be the NQ. Again, defying gravity, ripping to the upside. FANG stocks are at all-time highs. Valuations are through the roof. That's exactly what they want you to believe. Don't worry about valuation. Just keep buying the market. Just buy it. Remember the quote I said months ago. I was a fund manager. I just can't remember the name. I'm worried that there's nothing to worry about. Don't worry about it. Just keep buying the market. That's what they want you to believe. But in the meantime, we are going to buy pullbacks and dips into the zone. So this is your bigger support area. Okay, 56.42, which we're way away. Your next area is going to be the 21 EMA off the daily chart at 57.37. All right. Next is going to be again, new all-time highs. Yesterday's high will be your area of support, resistance. If we break through at the early part of the go and we continue to move higher, that will turn into support. 58.05, 57.86, and 57.77 way down here. We still have a gap to be filled, guys, so keep an eye on that right up in here. Okay, we have a gap area that still needs to be filled in the NQ. That's the only one that had the shallow pullback, which I said is actually very bullish. Okay, so let's keep an eye on those FANG stocks we talked about, right? The Facebooks, the Apple, the Amazon, the Google, and the Netflix. Keep an eye on those. Crude oil continues to get hammered on supply issues. We talked about this. If we can hold this area here, I'd like to see it pull back down here and get a double bottom and see if we can hold. I think it's going to fail again. I think crude oil will eventually take down the market too as well. But if you see here, actually, let me get another cursor here. What I'm thinking now is we need to see what the commitment to trade reports. If they continue to hedge in a big way, this is going to go much lower. So we're looking at here this area, and of course this area right here, which is the double bottom. If we come down to here, this is a big area of support right up in this area at $45. If we hold, we'll probably bounce again to the 49 now, making another lower high from this previous high and this previous high, and then I think we get a big flush. Okay, because after the driving season demand is over, all right, where now you'll see some supply draws on the weekly numbers. Once that happens, they'll run the market back up again. We'll create a good swing trade opportunity to be short. Right now, there's nothing good about crude oil to be long. Nothing at all. We talked about it right from here, actually. There was nothing good about it. So let's keep an eye on things. Let's continue to do well with the crude oil, because I do believe, like I mentioned before, we're going to be headed for lower prices in crude. But remember, you don't want to short in the hole. We're coming into some big support areas here, 47.30 to 47.80, and then you got your clusters down here for support. I'd be looking for a flush and a good buy somewhere here for a day trade, okay? Not to be holding stocks, but you can see here we have lower lows and lower highs. Not to be holding crude oil. We'll see what happens with the commitment to trade reports. Of course, we will fill you in on Monday with what happens there. Okay, next is gold. We have the risk on happening, so I believe gold, on a technical basis, should break down again. Right now it's holding up because there are some people that are hedging, right? They just don't believe that the market continues to go higher, right? And there are some big money that needs to park money in. So this could actually hold up well. But I do believe one or 2 day flushes and then hold any of these areas, I think it's a good spot to nibble in. Not now. I wouldn't do it right now. We're still going into the apex of this big symmetrical triangle. But these are your levels for today's trade off the daily chart. They haven't changed from yesterday. Now, as far as the tradable charts, here are your spots here, 1260, 1247 all the way up to 1255. So you got about 8.9 points there to take a look at, to actually hold and see if we hold true. Remember, we have a big area of support here, which comes in really nicely between the 1236 all the way up to 1255. That's a big gap. that's going to be filled. Remember, we need to fill these gaps at one point. And as technical technicians, keep an eye on them because they usually get filled. It might not happen the first day or two. This is going on now for 7-8 days. But if we bounce and then we fail, this is the areas here where I would have no problem kind of looking to leg into a long trade, right? Now let me open this up a little bit, and you could see that even down here, if we can double bottom down here, this would be fantastic. 12.16, and remember, we're only about, what, 9-10 trading days away. So this is the area that I'm watching. Your areas of resistance going to be 12.73, 12.77 if it gets up there. Okay, next is going to be your GDX, and it's another reason why GDX has done nothing. And I keep opening up this chart. We're actually in here into support. We have done nothing sideways. This is ready to build energy. Now we're going into the apex of the symmetrical triangle. We don't know where it's going to resolve itself, whether it be to the upside or to the downside. Wherever this breaks out is what we do with gold. That's really that simple. Until then, it's dead money. Look at the RSI. Look at MACD doing absolutely nothing. Stay away from gold. Stay away from GDX. Just my technical view. Bonds, again, guys, there are some fear out there, and some guys, some big money parking bonds in gold and in bonds itself. So, at 155 above on a break, I'd be looking to buy on a dip. But what scares me is that we have a risk on. So we could break out and then fail. If you are going to take the breakout trade for a gap fill, you need to keep a real tight stop, okay? Because I think what happens usually, we break out in bonds, and with the risk on, we're going to have a reversion back down. We're going to take out the 150, and we'll probably break down again, all right? Just keep an eye on the yields, okay? Now we'll have the ZB. Here's your area of resistance, and some of you do trade it, and I don't like to trade this. I like to swing trade bonds. But anyway, nice big area here. Holding true to a trend line. This cluster here of 154 all the way up to 154.43, resistance 155. This is it, guys. This has to get taken out today, tomorrow, on Monday, and then if that happens, then we can actually see some higher prices going to the gap fill. Okay, just keep that in mind. Next is going to be the TLT. Okay, we're back down below that 200. Remember, we need two closes above 124.88. Call it 125. If we take out the resistance here, which is getting even thinner, then I think we're going to take the gap fill, and I'll be interested in taking that area to move higher. Okay, go into the indexes. Looks like the 250 is going to be the target. We're talking about it right here. This is a true trend line, upper end, lower end. I like the fact that we'll probably go. We're going to have some down days in our fifth wave and our final wave up, absolutely. But they're going to get bought just like it has been doing since 2009. But we're getting very close to a top. I think 250 is going to be the target right up in here, guys, okay? Next is going to be, well, actually, let me just show you right up here. 250 is going to be the target for this whole leg up. This is going to be the fifth and final leg of this rally, okay? Next, it's going to be the 10-minute. Again, you could see just absolutely insane. It's insane. 30 years doing this, I have never seen a market how price just continues to move up with so many market divergences that happens and cannot pull this market down. This is where the Federal Reserve is taking place, comes in and buys the market. This is where the algos come in, because remember, we never had really algos participate until after really the market really started diving in and really being popular with the HFTs and algos right after the market crash in 2009. So that changed the dynamics of the market. And as a trader, you need to change as well. So anyway, 241.81, 240.89, 242.80, and this is your area of resistance, which really is no resistance, guys. Just because it's the high, it's really no resistance. So just be very careful. Look for pullbacks. The 241.81 is going to be more inclined to look to try to buy that market. We've got some nice supply and demand up in here. So that's going to be the area where I'm looking for the pullback again for higher prices. If it happens. I don't suspect it happening today unless there's some sort of news coming out. Okay, transports, like I mentioned, we have a sleeper. And what happens? Oh, wakes up like it did here. We went sideways for how many months? Okay, look at this. Look at this. 3.5 months sideways, and all of a sudden, boom, the market rallies. Transports rally. Same thing happens here. Same thing. We go sideways to slightly down, creating a bearish bias, and boom, we run right back up again. That's the ticket. And remember, we know where the big area is. It's going to be 158. That 200-day needs to hold. Until that 200-day, which all the fund managers see, if we're above the 200, they're buying stocks. And they will continue to buy stocks because they have no choice to. Okay? And the more of the bigger managers that trade more of the big hedge fund managers, portfolio managers. They're looking to get out once this market capitulates. It's going to be a no-brainer. No-brainer trade, guys, to the downside. Okay? Next is IWM. Same thing. All of a sudden, IWM goes actually lower into the elections and explodes higher. We revert lower. We go up another 5 days. We go down for almost 2 months. We go up. We go down, looking really sloppy, and all of a sudden, boom, a big engulfing candle changed the dynamic of the market. You can see the MACD and RSI. So big, a manipulated market that we're in. And remember, because it's only one-sided, it's to the upside. It's a heavily crowded trade buying the market. Valuations are through the roof, very expensive. Don't believe anyone out there that says that PEs, don't worry about PEs. Of course you worry about PEs. It's insane how I listen to CNBC, I actually giggle and laugh, and then I shut the TV off. It's not even worth listening to. Anyway, resistance 140, 180. Okay? 10 minute, you can see now we broke out of this area here. This is a big area, 137.64. Any pullbacks into these zones should be bought with tight stops, okay? Resistance 139, 138 here in IWM. And last, what can you say is the Qs? Boy, if you love buying it here, you'll love it up here. Well, I'm just being facetious, but guys, stay away from buying anything in your portfolio with these FANG stocks. They will get slaughtered when the time comes. Until then, trade them for the day. Absolutely. Which way would you trade them? To the long side. That's the only way to do it. You got to follow what the money's doing. Last 10 minute, just to give you an idea what's going on, you can see we went sideways for about 4 trading days. We do have a small little gap area here at 140 all the way to 139.80, small gap, and then we went sideways and now we're headed higher again. You'll see this will change the leadership role. The FANG stocks, including obviously the Qs, they've been rallying hard for the last several months. Eventually, there'll be another index that takes over because this now is going to this is exhausting itself. And you'll see it start to kind of teeter out again. So watch the FANG stocks. I want you to pay attention to that VIX. Every time the VIX gets hit, you're going to see the FANG stock get bought. And then the market starts to rally again. So be very careful. Don't get one-sided that you want to try to short the market. It's not worth it, and it doesn't help your trading account. Enjoy the weekend, guys, and we'll see you on Monday with a big update with the COT reports. Take care.